traders, Todd Gordon of TradingAnalysis.com. It's Thursday night, July 31st, and we're going to do the free stock options video update for Friday, August 1st. Today, big day. A lot of selling, a lot of volume, a lot of volatility. I want to talk to you about two of the trades we did today with clients, two of the several we did today. One, we actually got long the stock market today, and it's been the theme that we've been talking about in the free videos for a while, so I want to tell you specifically about this trade that we did today. This is the first of two trades I'm going to walk you through. First, we got long the QQQs. We sold SEP puts. We used the higher volatility into what we see as good Elliott Wave support in this wave 4 pullback to be short puts, which is a long stock position. So if we just, from the members area here, I'm just going to launch the setup chart. And here is the 60-minute we're looking at. This we see as white wave 3, and we're looking at a very simple ABC pullback in wave 4. Wave 4s typically are not just a simple ABC. Basically what we're looking at is this is the first push down that should establish the low in the NASDAQ. That's about 38.70 in the NAS, about 94.25 in the QQQs, okay? We think that this wave 4 could and should last at least until August, into August 3rd, maybe even out into the second week of August before this thing's over and the stock market can resume the upside trend. So what we did was we sold 92.63 puts in September. That's below this cluster of fib support in wave 4, as well as your typical wave 4 low, which would be the prior fourth wave, which is right at about 38.70, 38.60 there. So we're short just below wave 4 support. Now, if we go over to the Dow platform and we go up to QQQ and we go out to that September option, let me go to, oh, we're already there. You're going to notice that the one standard deviation is actually below 90. So a lot of guys, what they're doing is selling the one standard deviation puts to get long this market. And I'm telling you, you can actually shade it a little bit. We did the 92.63s because, again, we have good Elliott support that says we really shouldn't get below about 3,800, 3,830 in the NAS, which is all the way up here to about 94 or 93 in the QQQ. So you don't need to go all the way sub 90 at that one standard deviation, minus one standard deviation for that September option. So we can collect a little bit more premium for that. So what we did was collect what? $1.28 on that put, and we'll be looking to do a little bit more with confirmation that we've secured a low. The other trade we're looking at is XLU. We've been looking at a pretty good actually a direct relationship between bonds and utilities, okay? As interest rates start to go up, which we're seeing, you're going to see utilities fall out of favor because those are dividend players. If rates are going up, you don't need the dividends. So we're seeing a pretty good correlation. What you've seen here is the bond market, 30-year bonds put in a double top, utilities put in a higher top, and then all of a sudden utilities are starting to move lower. I think with yesterday's strong GDP number, bonds really took in the chin. They were quiet today, but I think the path least resistance is lower, especially if tomorrow's non-farm payroll is strong. So what we did is also set up a premium selling opportunity because over in the XLU, using the Dow and Sosnoff's IV rank, which is a nice little kind of rank of implied volatility compared to the 52-week range, above 50 is a good opportunity to sell premium. So what we did was take the idea that we think utilities are moving lower, but not much lower. Here's the chart, and here's what we did. This is the early goings of a wave 4 in the XLU. This is the daily chart. We think that this guy is going to go down in A, up in B, and then a little pullback in C. We should find support around 41, maybe 41.5. And from a time perspective, October is the minimum that we'd expect this fourth wave to complete. 100%, which is going to be basically the time elapsed in price travel in wave 2 compared to wave 4. You get 618 of time of those two kind of fib price studies in October. Ideally, we get out to the 100% of 4v2 and 4v3. And again, what we've done is study wave 2 compared to wave 4. We've also studied wave 3 compared to wave 4. And we've done it both price and time. And you get the intersection of price and time. That tells you we have a minimum date that this thing's going to end in October, an ideal date in December. We have a minimum price that this thing is going to find support, which is 41.76. And even if we get down to 40, that's fine too. So we have price and time. What that allows us to do is say we can define the boundaries that we would expect this thing to hold. Downside support is about, I went right below 39.25. That's actually the -1 standard deviation. On the top side, we think wave 3 is in. We don't think we're going to see the highs in utilities at least until December. So we'd like to sell options up here. So we did the 44.25, which is actually the +1 standard deviation. So this is a great example of Elliott Wave and Fib matching up with standard deviations. So what we did was we sold a strangle at 44 and 39. We collected, what do we do, 35 cents. We sold the 44.39 strangle for 35 cents. And again, that's a great, it's a great example of how Elliott and Fib match up with those standard deviations, where against that QQQ trade, we were able to shade that standard deviation because we don't think it's going to get to that -1 standard deviation because we have support, so we collected a little bit more premium. So all together, guys, again, trades. We sold the September 92.63 put, the QQQ set 92.63, collected $1.28. We also did the set 44.39 strangle in the XLU, both in September, both looking to take advantage of high volatility into good solid Elliott and Fib support. All right, guys, good luck. Hope it helps, and hopefully tomorrow's another volatile day. See you then.